Vancouver, Langley, Kelowna, Victoria, Scottsdale, and most recently, Cabo San Lucas. These are the markets that Amy Leong and Ali Ballam are taking their clients to find real estate deals. The Amy and Ali team has sold over $650 million worth of real estate and is a top 10 team here at Engel Volkers in Vancouver. They've quickly become one of the top sales and marketing teams within the Vancouver luxury real estate market and pride themselves on exceptional service and investment insights. So we're excited to have you both join us here today. Thanks for being here.
Thanks for having us.
So give the audience a little bit of background. How did you two first get connected, and how did the Amy and Ali team start? And give us some perspective on where the team is today.
So we actually met when we were doing our post-licensing course. We were in Fred's course. We didn't sit beside each other. I was probably the one that was always getting there late, but running from another appointment. But we met at our post-licensing. We sat side by side for that 1 week, and we got to talking about, kind of like our values and kind of what we wanted and saw ourselves achieving in our real estate careers. And it was funny because Amy, at the very end of our course, the last day, she threw over her book and she goes, "Sign right here," and it says to kick ass in real estate. And so we both signed, and then since then we just became really good friends. And she actually partnered up with her previous partner, and I was on my own. I was working with, my mom was in the business previously, but she was very, very part-time. And so I was working out in the Tri-Cities, and Amy was working downtown. We did a lot of co-lists together. And then eventually a couple of years later, now we've been together for 5 years. Yeah. Time flies. So it's been an amazing 5 years.
Awesome. Yeah. And obviously you guys met that way, and your mom, you said, was in real estate. How did you, come to get into real estate? What was the, spark that made you want to get into it? And how was it starting out? Was it early on success, or were there some hurdles that you kind of had to overcome?
Yeah, I think I'll start that one. So for me, actually both of us bought our first properties coincidentally at age 24. So that was kind of something that was, resonated both with us. We were kind of go-getters, I think, right from an early age. I was a competitive gymnast for 10 years. Ali was super competitive and played university volleyball. So I think we had like that drive already built inside of us, and the discipline behind, as you know, when you come from a sports background, you kind of have that just, normally. And so I think for myself, I'm a big goal setter. So for me, I wanted 3 properties by 30. I wanted 10 by 40, had no idea how I was going to do it. But that's where I met Taylor, is through RAIN and certain real estate investment networks. I was like the only young one, I thought, at the time, just sitting there soaking in all the information and knowledge, because I didn't know anyone that were friends or family even. None of, really my parents invested at all in real estate. They thought it was really risky because they went through the 80s interest rates at, 18%. So I had to go to other outlets to get information. And that's when it kind of just aligned when I met Ali, because, it is hard to meet other women investors. I think it's kind of a market that needs to be, we always like to be the influencers, and I'll let Ali explain how she kind of got the real estate bug.
Yeah. So for me, like Amy, I was working at Cactus Club, and that wasn't what I wanted to do with my career, but I was making really good money, and I was able to buy my first property. So I bought my first property in Yellowtown at the time. And when I bought my first property, I knew with my mom's background in real estate, I wanted to get into real estate one day, just because she was part-time and she had a very flexible schedule. For me, I didn't want to be part-time. I wanted to be full-time. I didn't want a 9-to-5 job. I didn't want a ceiling job where I can only make this much, or I can only, I had to work this many hours. I want a job that was more flexible, that I could work as much as I wanted to, and do as well as I wanted to do. I wanted to influence my family and friends around me to be able to help them achieve higher real estate goals by like learning more about investment in real estate, so I could help them as well as myself kind of further my investment portfolio. I think it's really big to surround yourself with people who are like-minded. When I met Amy, I only had 2 properties under my belt. Now, I'm in the double digits. And so I think surrounding yourself with people that motivate you and it can teach you, like, you can do this, you can make it happen. You just gotta, no matter what background, no matter where you come from. And it's not like it's baby steps. When I first started my very first year in real estate, I was working still full-time as a server. I sold 7 properties. Okay.
Wow.
I think I made it $48,000. When I realized when I stopped serving and the next year I went full-time into real estate, I tripled my income. Right. I knew what I wanted to do. I was motivated to do it. I had a goal, very goal oriented like Amy is. So I had a goal. I said I wanted to hit this many deals by the end of the year, and I surpassed that by doing it. So the first year wasn't
today. We
so
always
great,
set a goal of 100 homes minimum between the two of us a year, or $100 million in real estate sales, no matter what the market. And so now that it's changing, and I'm sure you guys have those questions for us, but what do you do to still crush it, to still hit your goals and turn off the noise, right?
And it's being creative with investments and looking for other opportunities for investors, which we've been doing, as you guys have seen over the last few years.
Very, very cool story. And, to start investing at such a young age, have that experience under your belt, have the ability to go and teach people how to do that and bring your family and friends along. I think it's been very cool to watch that process and, educating from the experience standpoint of I've done this and now I'm showing you what I've done. And so I think that part's very cool to see from you guys. Let's dive right into the most important part of today's conversation. The interest rate increase. We saw a 1% interest rate increase. What are you guys seeing in the market right now? How is that impacting that? And maybe fast forward, say 12, 18 months, what impact do you see this whole interest rate increase having on the supply side of things? We're already in a market that has limited supply. And if you're a developer, are you moving forward building 200 units right now? So kind of touch on the impact it's having today and where you see maybe the supply moving in the forward.
Do you want to start off with that?
Yeah. So I think for us, obviously we've seen a slowdown. That's, with everyone across the board. It's also coming at a time where historically July and August are, we can't forget every single year forever. It's one of the slowest times for real estate outside of, November, December. So, and the media, when things like this happen, they're having a field day. And so, it's funny because we obviously cross-sell a lot, Ali and I, in the States. And so when you kind of see different sides of perspectives in the States, interest rates are at 6.25% or 6%, or, for us as foreign nationals. If you're a US resident, you can get, in the 5s, right? Mm-hmm. So, but they don't think that that's high at all. And a lot of their development type of people or their builders, when it went to 10%, they're like, oh, this isn't too bad. So it's so different because, we take that and then you come back to Canada and then you hear about people just freaking out about, yes, it's a big announcement today. We're July 13th for anyone listening. They did, a whole point increase. That's been, it's been 25 years since it's went up that high. That's a long time. But then, Ali and I did an interview with CTV News in December, and I was talking about that it was the lowest inventory we've ever seen in like 30 years or whatever. So again, you see all these contrasting things that we've seen since the 80s, won't go back anymore because we weren't born yet. But so it's just interesting because again, that's why people need advisors that are in it in every cycle. When I bought my first place in 2009, it crashed, but I wasn't selling. So we're trying to tell people your psyche is going to play tricks on you. The key is do not over leverage. If you're in like right now, I'm in a house and Ali and I were strategizing and going, well, yes, I can afford my house mortgage by myself, but if things are going to slow down, can I rent my basement? So now I'm going to Airbnb my basement, to pay for half of my mortgage.
If not more. Yeah.
If not more. Some of our clients, and Ali herself as well, has turned 1 month minimum rentals instead of doing 1 year, because you can get more ROI and you can capitalize on, obviously post-COVID, film industry, executive type rentals are coming back into our city. And it's summer. People love to be in Vancouver in the summer. So again, we are very positive. I think we've been like that the whole way through. So when we talk to people, we're always going, how quickly can we come up with a better solution for you and your wealth and your current situation, and how do we strategize to set you apart? Whether that's going to be a 1 month minimum instead of telling you to put in someone for a year, or whether that's, can we do short-term rentals somewhere, or can we take you to Los Cabos, Mexico, where there's no red tape hardly because it's Mexico, for Airbnb, or can we take you to Scottsdale, where Allie's going to be for 6 months of the year.
And with that too, with moving into that short-term rental market in Scottsdale, those numbers, so that revenue per month, that net income is helping pay our clients' mortgages back here.
Wow.
Which is pretty cool. So now they're living financially free. So now they're saying, the interest rates are, our payments were before they were 1740. I was having a conversation with one of our clients the other day, 1740. And now they're at almost 2000 or whatever that is. Right. So they're not too concerned about that because they've been strategic in where they've placed their next investment so that they can use that short-term income money to be able to help with finances
offset
here.
Their finances. And I think that's the thing, like when you think that way and you think differently, it just helps people feel at ease because, yes, interest rates are high, but we also have an influx of 600,000 people coming in every year and a wait list of hundreds of thousands of people that want to come into our beautiful resource haven of a country, that would die to live here. And that's not going to stop, so again, just don't over leverage, take longer terms, lock in the interest rate if you don't have, the gut or to stomach different swings. But it's funny because it's like, we talk about this all the time with, our clients that are big into cryptocurrency, and man, they can take big swings, or the stock people that we know that are in the stock market, but yet real estate goes up by like a point and everyone loses it. We're just like, everyone take deep breaths and calm down. You just lost 200 grand in the stock market. But yet, your payment went up $500 a month, but it's still there physically as a hard asset.
Definitely.
Just different perspectives and coaching people through.
Lots going on in different markets, but I think more especially right now, very important to have a strong team like yourself on your side. And I follow you there on social media, and we've been taking a look at those fun bus tours you've been doing. Recently, the one in downtown. And what is the downtown core like right now? And what is the impact on some of those big tech companies coming to the area? What are you seeing there on sales and some of the rentals in that market?
Yeah, so the reason why we are focusing on downtown and we're so passionate about it is because of what we see the appreciation will be in the short coming years. And we're finding properties right now where we're seeing 2017 and 2017-18 pricing.
Yeah.
So we know that it's hit a certain height, right? So there was one building Amy sold in back in 2018 and it reached 840. Now there's a condo on sale for 680. We know it's going to get back to the 840, whether it's 2 years, 3 years, 4 years, we know it's going to get back there. It's a realized price, right? So I think getting people in now where we haven't seen that big increase downtown yet, is why we're doing these bus tours and educating people that downtown is still on sale.
We want them to thank us later. They say you don't have a crystal ball, but in a weird way, when someone's already paid a price already out of pocket, it's going to get back there. It's just a matter of time. And because we have Amazon, you're right, and because we have Microsoft and all these, tons of tech pouring into our city, and with COVID, everyone, went scram and went to the suburbs. And so when people ask us, where are you placing clients for investment? Well, we're not placing them into the suburbs right now because then they're paying the highest price that's ever been seen. If you look in 2018 at those townhomes, say in Langley or Surrey or
$599,
they're $300K cheaper. So, are you doing your client a service or are you doing them a disservice? And that's why we're the only agents really doing bus tours right now in downtown Vancouver, because we want almost to make a record of it to say, hey, we were the ones that were your pioneers. We were the ones that were looking after your hard-earned cash and capital. And we did that with Kelowna, and we did that with Langley. Actually, we were huge advocates before anyone was really looking there years ago, because again, we study economics and fundamentals and just where are people migrating and growing, and where's the retail and the commercial and the hoteliers, where are they going? We're not reinventing the wheel. We're just studying it better, I think, than most.
Yeah, real estate seems in general terms, it seems to kind of be a herd mentality. When people believe the market's going up, they're jumping in hand over fist to get in. And when the market's sliding a little bit, it's, completely slam the brakes. And so for people that believe that the market's, compressing and decreasing and that there's going to be some deals or some price decreases, how do you give advice to people that are looking to time the bottom of the market? What type of advice do you give to people that say, hey, I want to purchase in September because I believe it's going to be 10% cheaper than what it is today? What guidance do you provide there?
Well, I can talk on this, but I think you should about your rental. If you just to mention how you sold and you can say it for you. Like, so Amy, I sold Amy's property. She did really well. She bought in Hastings Sunrise. Everyone told her not to buy there. She bought pre-construction. What did you make? I think it was over 400,000. It went up in those few short years. So she wanted to time the market. She sold. She went and rented to time the market to see. No one knew, right? No one can time the market and know when it's going to be the lowest point. And she rented for a year.
I tried to time it because I thought this market right now reminds us of. So, in 2019, again, we had the spec tax, we had vacancy tax, and then we had foreign buyers tax. So everything kind of came down on the market, or it felt really doom and gloom if anyone looks back at 2019. And it took, we were so spoiled because into 2017, 2018, it was just like how we just had it. Listings were, barely on a week. You barely showed the property and it sold, and everyone felt so amazing and flying high. Then all those, announcements came and everyone's like, oh my gosh, like the sky's falling. So same thing as it is now. And then people tried to time it. So from personal experience, I think we're able to share a lot with people because we've gone through it ourselves. And when you go through it yourself, you can talk so confidently. But we also have been telling people, your psyche's your biggest, it's
hurdle.
It's the biggest hurdle to your growth. And, do people wish they bought 1,000 houses in 1980 when the interest rates were 18%? Yeah. They do. If my dad could go back in time, he would tell you today. I wish he bought 10. But we understand, you do want to keep these things in your mind. You don't want to just wing it and buy anything. No, we're not saying that. But we're just saying, instead of lining up at the store with 50 other people trying to get a pair of shoes, do you want the, behind closed doors, the store's completely private and locked for you and you can negotiate on the price? Yeah. So maybe it's just your psyche it's just funny because this is always going to happen to us. It's always going to go up or down or move around. It's just how firm are you in your goals and who are you going to talk to make those happen? And
I think one of the things, we sold a couple of projects in Langley back in 2018, and that was when the market was on its way down, right? 2018, we sold all of our clients about 2 months before we completed. I think everyone was worth about the same price, if not less. 25, 30K less from what we originally bought it for. Now, back in between September last year and February this year, we sold about 10 of those units. Everyone made at least $200,000 profit buying in a down market. Yeah. And I think that's the other thing, how many people sell, like when you actually look at it, even when this last happened in 2019, not everyone's ready to act. So that they'll say, I'm waiting. They don't get ready. They don't get their refi done. They don't have liquid capital anyways to use to deploy. So they literally are always going to be on the sidelines. We have clients or potential clients like for 5 years. For 5 years, and they could be doctors making, $500-600K a year, and they're still to this day on the sidelines. And, again, only a certain percentage of people have to sell. We saw that when, we went through 2019 into 2020. The only people that lost money, I think out of, we did 120 transactions that year, 2. So if our sellers are those 2 people, the buyers on the other side, who was ready to even buy that house at a discount, we called them all to say, hey, we've got these deals and the sellers are in hot water. They still couldn't act. So they're still on the sidelines. They're still waiting for what? There was your deal. Here's one we presented you. They usually can't buy it. So our advice is, again, make sure you're ready in this market to pick up some deals should they present it to you, because otherwise it's a moot point. You miss the mark, right?
Right. And over the last few years, you've been steering your clients to, Victoria, Kelowna, recently Scottsdale. What about these markets are you liking?
Well, the reason why is because we couldn't get cash flow in Vancouver anymore. So that was one of the reasons why, and we couldn't even get things to break even. So which is why we started moving people to Victoria, because we studied economics. We knew that the appreciation was going to be quite good there. So, and the cash flow was decent. It was cash flowing $100 to $200 a month compared to negative $200 or $300 a month in Vancouver. So we were steering people towards that. We were steering people towards short-term rentals in Kelowna because the numbers really made sense there. In the buildings that we did sell them, there was no Airbnb restrictions. It was grandfathered in. So we were quite confident that, the rules wouldn't be changing on our clients like they can here. And then with Arizona, we bought our first property because we wanted to make sure that, we're always the guinea pigs for our clients. We don't want to tell clients to buy somewhere where we haven't bought, seen realized numbers and kind of done it for 6 months and seen what kind of potential there could possibly be before getting people on board to buy. And that's what we did. And when we went into that market and we saw the numbers and how amazing they were, even with the high interest rates, we're buying these houses that are the cost of a 1-bedroom in Langley, right? And they're producing, $1,000 to $2,500 USD a month cash flow.
Net cash flow.
Right. So,
and with the exchange rate and holding, the US dollar too, it's also a currency play. And then, we had a lot of people say, oh, well, if you look a year ago, those properties were $300K cheaper. But we had to shut the noise off for even our own purchases. And we're so glad. And so are all of our clients that we got in, because again, yes, the price is high, or it's gone up 20, 30%, but to focus on what you're actually putting out in capital, you can get a mortgage, which a lot of Canadians don't know, for as little as 20 to 25% down. So really, whether it's, $800K or $750K, it's such a nominal difference in actual capital output. So just get the property, if it's a long-term hold, we're not telling you to go flip in 3 months. We want you to enjoy it and do cannonballs in the pool and have margarita freezies and, enjoy your life. And right.
Did call a place I called home for about 20 years. So I do love Scottsdale, and a lot of opportunities there right now.
Yeah. Amazing.
Yeah, and there's obviously a lot of nuances with investing in the US with, lending and the closing costs and stuff like that. So if anyone is interested in learning more about cross-border investing, they have a great program that they've set up that they've used themselves. So definitely reach out to Amy and Ali. We do have time here quickly for one more final question. I know that you guys both own and operate Airbnbs in Kelowna and Scottsdale. Talk about that strategy, how that's worked for you. Obviously, the cash flow numbers sound great. How's the day-to-day maintenance of it? Is a lot of work? Is it passive? What are you seeing so far?
So we actually have a property manager for a full-time property manager. So they charge 18%. They look after all the day-to-day maintenance, the pool maintenance, the cleaning schedules. If, the garbage is not working or coming, they organize
the garbage
everything.
Melts there, you guys. So you have to have someone on the ball or else your garbage will melt to the sidewalk.
So they look after everything for you. They look after all the bookings, speaking with all the guests. It is, you can be as involved as you want to be, but all of us and all of our clients don't want really to be involved at all. They just want to see the numbers and the money
and
going
pick
to
the
the bank
furniture
account.
and go shopping for all the furniture.
Exactly.
So it's great. It's a turnkey process. Financing and getting a mortgage in the US is a lot easier than most people think. So we've done a lot of research over the last few years, and we've got 2 great mortgage specialists we work with. So if there is anyone that's interested, we're happy to guide you guys through the process.
And then Kelowna, I think you had asked about, is we own 2 properties in Kelowna. One's a 2-bed, one's a 1-bed. So just getting them up and running because the building that we bought in just completed. But we're very bullish on Kelowna. I think there's a progressive city, way more than say Kamloops, which has stayed very stagnant until recent. So we like to look at markets that, again, have a lot of different factors for growth, not just say one resource dependent. To us, that's more of like a Calgary, Edmonton, where, it's just a different look. And what we're studying right now is where inheritance is going and where baby boomers are going. but also the younger generation. And so when you put all of those together, you start to hunt for markets like that. And then Kelowna with the big UBC coming as well, being built there. So you've got the young generation, but you've also got people that are going to retire for years to come and take out a lot of equity from their homes here in Vancouver. And they want the Okanagan life. And there's we heard a stat from one of our EV advisors in Kelowna. Some of the top billionaires in the world actually live and play in the Okanagan in Kelowna. So it's a special place, and I think as more people discover it post-COVID, I think it's going to be really strong moving forward.
Fantastic. Yeah, sounds like a very kind of passive way of owning and managing real estate, and increasing your monthly income using that versus the corporate rental side or the monthly rental side.
Mm-hmm. Yeah.
Awesome. Want to wrap it up?
Yeah, thanks so much for joining us. We appreciate you taking the time. You both have great social media presence, so anyone looking to learn a bit more, learn about their bus tours or the available units that they're selling, definitely check out their social media. And again, thanks for joining us, and have a great rest of your day.
Thanks, guys. You
guys.
too.
Appreciate it.